just business news, we're news for business people.
Watch us live in conversation with Navneet Agrawal on the power of quality.
Quality of business and quality of management, because that's the 90%, 95% of the investing. Quality is the starting point. If you don't have quality, it's not taking up the journey at all.
Watch us live in conversation with Navneet Agrawal on 31st October at 11 a.m. as we discuss the power of quality in the process of investing. Send in your queries using the hashtag AskBQ to BloombergQuint.com. Write to us now. Use the word Ramdev in all your queries.
Hello and welcome. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Dsouza.
Good morning. I'm Agam Vakil, and here are the top headlines. Well, it's a muted start for the new derivatives series. Benchmark indices trade flat, but open interest surges in United Spirits as traders take fresh long positions in its futures contracts. Yes Bank is the worst Nifty performer today after the private lender's earnings revealed gross underreporting of over 6,300 crores in the last financial year. And 4 Nifty companies, ICICI Bank, Indian Oil, Maruti Suzuki and ITC, will report their quarterly earnings today.
All right, let's take a look as to how the markets are panning out right now. It's been a positive start on day one of the November series, and what a series we've had in terms of the October series. If you look at the absolute gain which we've recorded in the October series, it's the highest series to series in the last 19 series, in fact. So it's definitely been a good series for the market. But going on, what one can expect in the November series so far, actually you're seeing some bit of negative tick coming about for Nifty. It's just down by almost 3 to 4 points, but remember, it's still trading with premium of almost 17 points, which is at par with yesterday's closing premium. A little bit of caution there as India Volatility Index is trading in the positive territory with gains of 1% right now at levels of 11.74. Let's tell you then what's the kind of range that one can expect in November. It's 10,000 on the downside to about 10,500 on the upside. That's where the maximum open interest concentration is. And for Nifty to scale higher to 10,500 levels, it has to still be trading above the 10,300 mark for a few days. Let's see if we can achieve that or not. In terms of most active strikes today, it is the 10,300 put and the 10,500 call. But if you look at Bank Nifty, it's still away from its all-time high levels. We didn't see Bank Nifty touching those levels in the previous series as well, where Bank Nifty also rose nearly 4%. All-time high level is 25,198.8. So that's a key resistance in this series for Bank Nifty. Once it crosses that mark, probably you could see further gains coming about. That's the chart there on your screen with regard to how Nifty has performed in various series. 2017 has been a good year for the markets, and if you look at the October series, 575 points gain. Before that, the July series was pretty good when Nifty gained almost over 500 points. A little bit of correction was seen in the month of August and September, but mostly majority of the series we've seen good gains coming about. And similar has been the case for Bank Nifty, just barring August and September. Bank Nifty in 2017 in all the series have given you positive returns. Well, it's day one of the November series. It's very important to see how the FIs have been positioning themselves then. They've been selling in the cash segment, but if you look at the positioning, that's the index futures positioning at the start of the series, 70% long. Compare this to the October series, it was 56%, telling you that they've taken more of long positions on index futures at the start of the series. Let's also pull up the options data then. If you look at the call long and the put long, well, the positioning has been divided. It's 50-50%. But if you compare the writing part, they've written more of puts, which is definitely a positive sign as compared to the October series where they had written more of calls. So at the start of the series, the positioning looks good. The cues are good. both domestic as well as global cues.
Right.
It remains to be seen, Agam, if we can scale to higher levels. 10,500, I believe, is the mark which the market will be watching out for.
Absolutely, and with that, we've seen a good jump as far as open interest is concerned for a lot of these stock futures, considering it is a new day and a new expiry when it comes to a lot of these stock futures. So let's pull the list of the most increase in open interest for these stocks. So, we have the likes of Kerala Healthcare, Bata India, Oil India, Havells India, and IndusInd Bank, all still gaining well anywhere between 16 to 20% as far as open interest goes. So, though very little in change in terms of stocks, Oil India is one counter that stands out. Fresh shorts building up there, the stocks declining by as much as 3%. In terms of unwinding, again, this is the time where you won't see too much unwinding in a lot of these stocks, considering we are moving into a new contract. But if we can pull up the list of stocks which are looking at unwinding in open interest, well, you'll notice that we will have a substantial change in the likes of NBCC and Bharti Airtel, Canfin Homes, as well as IFFC. We're also seeing some amount of weakness there. But 4 big stocks ready to announce earnings today.
Yeah.
And they surprisingly aren't really doing too much, but I suppose traders are still, cautious before taking their positions for now. So we have the likes of ICICI Bank, ITC, as well as IOC and Maruti Suzuki. Not too much change in open interest, very steady for now, and we'll have to wait and watch whether or not there will be a surge as their earnings come in, Navneet.
And these are market-moving earnings. Both ICICI and ITC are the heavyweights on the index. We'll be watching out for all these important earnings. On that note, let's welcome our F&O experts for the day, Hemant Tukral of Aditya Birla Money and Navneet Dsouza of IIFL Wealth joins us on the show now. Good morning to both of you gentlemen, and appreciate you joining us today on Bloomberg Quinn. Hemant, let me come to you first. We are starting this series at all-time high levels on Nifty. Bank Nifty has been a laggard, but let's not forget we've seen good performance this week from Bank Nifty. But in the last 2 sessions today as well as yesterday, there has been some sort of weakness or rather profit booking coming about. What's the view on Bank Nifty?
See, I have a feeling that Bank Nifty remains in the same range for any reasons like Yes Bank results or ICICI Bank results expected tomorrow. I have a feeling Bank Nifty is still in the range, so we can't predict that whether it will come out of the range or not. It's still feeling resistance around 25,200. Downside supports now will change to 24,750, 24,800, but the broader range is not changing. So if you see the big ranges between 23,900 to 25,200, I think Bank Nifty has 3 times now gone within this range. So yes, it is closer to the upper side of the range, so you have to trade positively. So 24,750 till now it's not taken out. That means it's on the upper side of the range. Any one stock giving a positive results like ICICI Bank, if they can surprise, it is tough, but if it can surprise, then I think it will come out of that range. Moment it comes out of range by going above 25,100, then you will see a very big jump till 26,500, I feel. So it's just a question of time, but for the timing, it is still in the range. So nothing much can be done with the Bank Nifty right now.
Navneet, good morning to you. You also expect some amount of consolidation when it comes to the benchmarks over the next 4 or 5 sessions?
Well, there's a larger possibility of that. Look, the larger adjustments of the heavyweight private banks and NBFCs and that rotation money to the laggards likes of PSU Banks, as well as some kind of an infrastructure stocks, heavyweight infrastructure stocks likes of L&T has been seen. So the majority of the index adjustment has been seen, and now looking at the way the private bank structures have been forming up, it would be difficult for the benchmark indices to keep on continuing the kind of a momentum on the ride on the higher side. Similarly, the Bank Nifty, the way it's been hovering around near to 25,000 levels, is giving me a feeling that there would be a lot of consolidation before we make a dash about 25,200 levels. Definitely, it can be a surprise card, can be an ICICI Bank, which can be a decider for the Bank Nifty trend. But largely, it's looking likely that basically before we make any dash on the higher side, the overall trend remains positive. But before making any dash on the higher side, it's looking likely that we'll have a lot of consolidation before that.
All right, so that's the view coming in on markets. Let's shift focus to options corner now, and let's see what kind of option strategies our guests have for the day. Navneet Daga has a Nifty bank short straddle strategy, but before we take a look at that strategy, let's see what it means. A short straddle is one when one sells at the money calls and puts in anticipation of decrease in volatility. And when the volatility decreases, followed by contraction in option premiums, the strategy becomes profitable. Over to you, Navneet. Take us through your Nifty bank strategy.
Look, that's a kind of a very tactical strategy, because we know that the bank Nifty kind of see a sporadic kind of a movements. So this has to be done with a very strict stop loss is the first thing that I'll say that. At this point of time, if you look at the weekly options there for the next week or so, we are getting almost for 425 to 450 points, and depending on the entry point. So I'll recommend to sell in 25,000 call and put options. The combined premium is around near to 450 odd range, and we expect, if the way we are saying that the consolidation would be due for the benchmark indices, if that happens, we expect that the time value decay would lessen down the premium, and we expect the target price of this combined premium somewhere in the range of 420 to 240 to 120 odd range. And I'll keep us very strict stop loss if the spreads, then the combined spreads widens towards 480 or somewhere into 580 odd range. That would be my stop loss level. So I'll place a 130 point stop loss in this trade and play for a consolidation in the market.
There you have it, guys. Navneet is playing for consolidation in the markets, at least in the near term. But Hemant, your strategy is a little more straightforward.
See, I am, first of all, I am of a very firm belief that if the Nifty is trading at all-time highs, there is no question of going with a strategy other than being bullish. Because I still feel that if it would not have been Bank Nifty today or a Yes Bank result today, we would have touched at least 10,450, 10,500 on the upside. So I would continue to be bullish. I think 10,400 calls should be bought. It is in the range of 115 to 117. I'll keep a stop loss of 80 rupees, which will coincide if it moves below 10,250, because that would mean that it's entering in a range straight away. And my target of 10,450, if reaches, the call will come around 175, 180. I still feel that maybe next week we should be able to move towards 10,450, 10,500.
All right, so that's a bullish view coming on Nifty by Hemant. He's recommending to buy the 10,400 call strike. Let's also take a look at active stock futures then in today's trading session. And clearly, if you talk about the active future or the active stock option today, it has to be Yes Bank. And if I'm just looking at the options data, there's maximum open interest concentration at the 300 put and the 350 put strike there. And there's been a lot of put addition coming in for the 300 strike. That's added almost 13 lakh shares. And even the 320, 330 and the 350 strikes of Yes Bank have seen significant amount of call writing coming about. Let me take this question to Navneet. If somebody has to take a position here on Yes Bank, well, definitely I'm sure the cues are not looking great at all. Just to talk about the range, what the options data is suggesting, it's between 300 to 350 on the upside. Let's say if somebody's taken a short position already, what should they do? Would you recommend them to book profits? Because the stock seems to be off day's low right now.
Look, in fact, I would say that to recommend to book profits at somewhere in the range of 300 levels, because there has been an aggressive writing on the lower end of the 300 range, and we believe that that support likely to be held on the lower side. Initial reactions in the market were 300 was a first take. So to my understanding, the risk rewards are quite favorable to book your profits at the range of in the 305 to 310 range current market price. If it started to break below 300, then it could be a different ball game. Then the targets on the lower side can extend to even 280 odd levels. But looking likely at this point of time, if somebody is short on Yes Bank, one should look to book profit in this range.
Well, the drinkers have started looking at spirits a little early this Friday because United Spirits is certainly doing very well in today's job trade. That stock is up 14% for now. and open interest has increased by as much as 9%. This is, of course, on account of the substantial expansion in margins that we are looking at for that company. Hemant, United Spirits is looking at a lot of strength right now, but at these levels, would you advise anyone to go long on, should they intend to do so?
See, first of all, yes, it's straight away entering an overbought zone, and you may see small corrections coming in. But for me, importance is that stock is given a clear breakout above 2750, and already rollovers were very high. You can't have a stock with 92% roll unless until somebody was very convinced that the results will be very good. I have a feeling that United Spirits will go ahead and test 3150. Yes, it may take some time, and you may see a first cool off happening, but it becomes a buy on dips for me until 2760 is violated. So I think another 200 points momentum can be seen, but don't add aggressively today. Just wait. It may fall by 50-60 rupees for profit taking. That would be the right zone to enter, because risk reward will come in our favor.
Even if I look at United Breweries, that's another counter from the same space which has been doing well, and not only today, actually the stock's up for the 5th straight session. If I were to ask you to choose one between United Spirits or Breweries to take a long position, which one would that be?
See, I would take United Spirits again. First reason, United Spirits has given a fresh breakout today. UBL has already given a breakout by moving above 875, I think 2 days back, and UBL is slightly looking more stretched. But at the same time, both these stocks are looking extremely strong. United Spirits will have a higher target because it's given fresh breakout today. UBL, don't see it going above 1065 in a hurry. So I think United Spirits would be a better bet.
So there you have it. Hemant prefers United Spirits over United Breweries for now, but we'll move on and address the queries of our viewers. Our first caller is Anya Kapoor, and she's calling to us from Mumbai. Hi Anya, thanks for joining us. Tell us, what would you like to know from our experts?
Hi, do you think market is overbought, and is it advisable to take long position on Nifty futures of November series?
Navneet, I know that you hold a view of consolidation, but Anya wants to know whether or not these markets are overbought, and what should she do when it comes to the November series?
Well, my view is consolidation on the banks until we break about 25,200 levels. But overall trajectory, I was saying that the markets are making a fresh higher highs, and it's a good sign. The market making a fresh continuous basis of fresh long higher highs and higher bottoms, and the trajectory remains on the higher side only. The question is basically the markets are overbought or not. Yes, it looks likely that before we making any fresh dash on the high side, we would have some kind of a consolidation. But it's a kind of a market whereby if you're getting any dips, if you're entering into those dips and buying into this dip and riding the trend on the high side, it is favoring you. So either wait for a dip on the high side, or either wait for banks to give you a signal that the markets are making at a fresh new highs on the high side. So either I'll break for somewhere in the levels of somewhere into 10,250 odd levels on the lower side, somewhere in that range. If you're getting in the dips near to that level, entering into the market would be a good sign. Or either we see a breakout about 10,400 levels, then you chase the market on the high side. It would be a good strategy.
All right, so that's the strategy coming in on Nifty. We've got a live viewer, Anay Joshi, who's joined us on Facebook. Anay is saying Vedanta future one lot at 333. Well, Anay has not clearly specified whether he's long or short. And if I look at the spot rate, or rather the November future rate, it's higher than the 333 mark. Heyman, what's the view on Vedanta futures if somebody's taken a call?
See, I have been continuously saying, and I still say that metals are in a different orbit altogether. Yes, they are overbought. You will see odd days where they will be negative, or they may see a cool off. But I think every dip should be buying. I feel Vedanta will test 360, so I would continue to hold long. I would keep a stop loss of 328 on the same. So risk reward is also in her favor. But as I said, be it any metal, I would be on the long side only. Metals, I still feel as an index, the chart is very, very bullish.
from earlier. And the first Twitter query on Facebook is from Viral Thakrar, and he has bought IDBI Bank November futures at around 67.80, and he wants to know what is the right time to exit. Navneet, if I may come to you on this one, IDBI Bank November futures at 67.80, when is the right time to exit?
Well, this entire PSU banking lots has been all over the place, and we have seen some kind of an euphoric moves on the higher side, and it's not that easy to chase this kind of a move on the higher side until you've got a decent entry price. But I guess, to my understanding, he has got an entry price 67.80, which is a bit on the higher side. And it's look likely that after this euphoric move, what we have seen is a kind of a more of a short squeeze on this most of this PSU banking counters, rather than being fresh long addition. Apart from those, the top heavyweights one. So it's looking likely that it's better to trail your stop loss level, at least place a stop loss level in the range of 63.50 odd range, and look for a reversal. But it's not very convincing chart to me. On the high side, it's looking likely that somewhere in the range of 67 to 670 range, it would have a lot of supply zone. So to my understanding, place your stop loss 63.50 on the lower side and wait for a pullback to exit at a cost price also.
All right, so you can look to exit at the cost price, but you can place that stop loss around levels of 63.5 on IDBI. Sandeep Konda has written to us on Facebook. Well, he's saying that he understands that the combined market cap of SBI, PNB, Canara Bank as well as BOB has gone up by almost 1 lakh crore Agam, and he's also saying if you combine the other small PSUs, it's gone up by almost 1.3 lakh crore, which is equivalent to the recap bond value which has been announced by the government. To cut the long story short, Sandeep wants to know, should one look to go short in PSU banks at this level, considering the uncertainty in implementation of this plan? Hemant, would you recommend taking any sort of short position in any of the PSU banking counters, considering they've rallied a lot this week?
See, first of all, I think he is more taking about a fundamental view that whether the news will work out or not, or the event will work out or not, but I can only suggest him seeing the technicals. I have a feeling that PSU Bank Index has given a breakout, so I will not go short. The second question, can they fall from here? Yes, because they had moved up very sharply, so they can cool off. For example, if I take SBI, I do expect that SBI can come off till 305, 307. But now I will only go short if it goes below 300, because that's the breakout level from where it has given a breakout. In fact, if it comes to 307, I'll be a buyer. I still feel it has the potential to go ahead and retest all-time highs of 335. So I would not go short on PSU banks, but yes, I would wait for some dip to go long.
Okay, so that's the view coming in as far as your PSU banking sector is concerned. But there's just one more query that we may address before we go on to trading strategies. This query comes from Rakesh Kumar, and he has a long position on one lot of HCL Technologies at 890. The stock fell sharply yesterday, but he wants to know whether or not he can exit. As far as HCL Technologies is concerned, it's looking at, well, about a 0.4% cut in today's day of trade, very little change in open interest. Navneet, what's your call here as far as HCL Technologies goes?
Well, to our understanding, these are, in fact, the HCL technology per se, it would form a lot of resistance now at somewhere in the range of 920 to 930 odd range. It doesn't look like that it will be able to cross about that level that easily. Since his entry price is also on the higher band, to my understanding, if we're getting any chance towards a range of 890 odd range to this cost price, you should look to exit, because the trends are not very much clear on this, and the larger trend remains to be on the sideways and this in HCL Tech as well as in the IT pack. So it's better to if you're getting a chances in the range of somewhere into 890 odd range, you should look to exit that trade. And don't forget to place a stop loss on the lower side, and stop loss, to my understanding, should be on the closing basis as closing basis below 860 odd range.
All right, so stop loss on HCL can be around those levels of 860. It's time for us to get you some more trading strategies from our guest. And Hemant, I can see you've got 2 long calls for the day. Could you take us through your calls?
See, I've selected 2 stocks which rollovers have been very good. One is oil and gas stock MRPL. I think the way rollovers have planned out, 87% positions have been rolled, which is a very good rollover for this stock. I feel the stock momentum will continue. I have a target of 142 with a stop loss of 131. Second would be Century Textile. This stock continuously shows good rollovers. It's again shown a 92% rollovers, and the stock in any case has closed near to its new 52-week high. Today it started making a new 52-week high now. So I will continue to, or add fresh longs with a stop loss of 1360 and a target of 1435.
Okay, before we move on to Navneet, let's cut across to the Biocon press conference. And this is the earnings conference. We've seen a weak set of numbers, but let's listen in as to what the management has to say about this quarter.
Percent from 955 to 969 crores this fiscal. If you look at segmentally, our small molecules is the one that has really impacted our growth in a significant way. It has basically degrown 13% from 403 crores last fiscal to 351 crores this fiscal. Our biologics business has remained flat at 156 crores, and as I explained earlier, this is largely attributable to the plant shutdown that we have taken in order to comply with certain regulatory requirements. So we expect some of the growth to come back starting Q3, but the real growth anticipated in biologics will actually show robust uptick from FY19 onwards. The two businesses in our segmental review that I'd like to also talk about in a positive way are the research services business, which is Syngene's business. That has shown a sharp recovery this quarter. And this is largely on account of our dedicated centers as well as our chemical development business, which had seen some muted growth in the previous quarters, but this has sharply recovered, and we expect that this will remain so for the rest of this fiscal and onwards. So I think that has been a very positive contributor to our numbers this fiscal and this quarter. In terms of branded formulations, this has certainly shown a sharp uptick, 29% year-on-year growth this quarter. I must, of course, mention here that some of this has had a restocking due to the GST impact that we had faced last quarter. But therefore, when you view at a half-yearly level, the growth is modest. It's about 4%. But if you look at it at the Q2 level, it's a sharp 29% increase. And I would say that going forward, we are likely to see a good healthy double-digit growth in this particular segment.
All right, that's the management of Biocon talking about the September quarter earnings, which were weak, so to say. If you look at the earnings, especially the profit growth and the margins were not great for this quarter. But we were talking about the trading strategies. Navneet, could you take us through your top trading strategies for the day?
Well, I would look to go long on the likes of infra and the power sector. That's where we are seeing the incremental of higher amount of rolls happening in the market. And the Siemens is one stock whereby I've seen some kind of a bottom formation has been visible. To my understanding, the stock can again go back to the levels of somewhere into 340 and 1340 odd range. So it's a good time to accumulate the stock at a lower levels of somewhere into 1270 to 1275 range on the November future, and place a stop loss on the lower side at 1250 and ride for the upward momentum of 1340 on the higher side. The second stock is basically my carry forward trade from the last week, the likes of REC, which we have recommended at a 160 odd levels. Currently it's 172. I'll still maintain that we have seen the incremental amount of short covering happening in that stock, and now the long formation is happening. And looking likely the chart patterns is visible that somewhere in the levels of 185 is possible on the higher side. So one can go long on REC November futures in the range of 170 to 172 range, and place a stop loss on the lower side of 162 and ride for the open momentum of 185.
Okay, so those are the views coming in from Navneet and all the the calls that you can take as we move into trade over the next 4 or 5 sessions. And with that, we'd like to thank both our experts, Navneet and Hemant, for joining us in today's Day of Trade and taking us through some of those strategies as well as solving some of our viewers' queries. But time to move on and address L&T Finance Holding, which has posted a healthy set of numbers for this September quarter with lower taxes aiding the bottom line. To discuss the second quarter's earnings in further detail, we are in a conversation with the Managing Director and CEO, Dinanath Dibhashi, and our very own Yatin Mota, of course, who is also joining us to tell us about what the quarter has been all about and maybe take us through the quarter along with the management. Yatin.
Thank you so much, Agam. And, let's talk to the management. Sir, thank you so much for joining Bloomberg Quint and taking out your time. Talking about the focused loan growth, which is almost over 20% during the quarter, do you think this kind of run rate is sustainable over the next 3 to 4 quarters?
I think it is important to understand first the overall results in the context of what we are doing. We have said that we are doing a few simple things to take the ROE up. The ROE up is up to more than 15%, the best ever ROE that we have declared, 45% growth in profit. And as you rightly said, it is on the back of growth in excellent growth in our core businesses, other than, of course, a very good growth in fee income and strict control on NPAs as well as expenses. These are some of the very basic things which we have been working on quarter after quarter after quarter, and they are now presenting results. As far as the focus business growth is concerned, yes, most definitely industry growth is a very important factor. But what we have said over the last 6 quarters is that yes, industry will grow at a particular rate. But the focus businesses that we are in, we will build strengths, we will build rights to win in such a way that we will always try and outperform the industry. Based on that, in fact, if you see the disbursement growth in rural, infrastructure and housing, all three the disbursement growths are very strong. In fact, rural and wholesale, the disbursement growth are of the order of 80% odd, and housing it is more than 30%. And this 23% that we are talking about is after the 23% book growth is after downselling a fair bit of our book, that disbursement, and generating fees. So given this context, we believe that continuing this kind of book growth will not be a challenge.
Okay. And talking about the gross NPA position, we have seen in general banks face higher stress loans in the second quarter, but you have seen a sequential growth of almost 7 to 8% on your gross NPA front. So in terms of a guidance for the coming quarters when it comes to the asset quality, do you think you will be able to deliver a better asset quality?
If you take from last year, the 90 DPD asset quality has improved drastically. The gross NPA ratio and the net NPA ratio both have improved from some 8% odd to the 5.8% that you see. Even the deterioration that we are talking about from Q1 to Q2 is hardly 9 basis points, from 5.71% to 5.8%. So I wouldn't really call it deterioration. I would actually call asset quality has been stable. The important part also to remember is September is the seasonally bad month for, or the second quarter is a seasonally bad quarter for the rural portfolio. At this point of time, the money has still to come in the hands of the farmer. And as the money comes in the hand of the farmer, the NPA quality will actually be better. Same as far as infra is concerned. We have we have been always been declaring our entire impaired asset book. We have said that to reach a particular provision coverage level, we are running very hard and doing voluntary provisions very aggressively. Considering both the improvement of rural asset quality in the next couple of quarters and the increasing amount of voluntary provisions, we actually expect the NNPA to total asset ratio to actually come down in the next few quarters. The asset quality will not only remain stable, we expect it to improve in the short term.
Okay, good to know that. And sir, talking about your cost of funding, do you see some improvement in net interest margins moving forward, given the fact that you have access to lower cost of funds, and more importantly, the kind of growth that we have seen in housing finance book of yours and the rural financing book? Do you think there is scope for better margins moving forward?
The ratio that we measure is not only margins, but margins plus fees. There is a particular reason for that. Because conceptually, and I believe this, that conceptually just margins, just NIMs will never be the friend of NBFCs. They will always be the friends of banks, right? NBFCs, if we go for consistently higher margin, after some time, after a few years, we will get higher credit cost. So I always believe that margins plus fees is the ratio to measure, because it measures not only your capacity to lend, but your capacity to identify assets, underwrite assets, and then sell down assets. Because the fees that you generate are from underwriting and selling down. If you take our NIMs plus fees, it has improved from about 6.5% last year to about 7% this year. We expect that kind of number to also more or less continue. So just margins, if we talk about, they will go up and down based on the interest rate. But margins plus fees is a number we expect to continue to do pretty well.
Okay, and one final question from my side is, in terms of the growth guidance moving forward, how do you see the things shaping up? If you could share your guidance, and more importantly, what will be the growth driver for L&T Finance moving forward?
We have 3 lending business and 2 non-lending businesses. All these 5 businesses are our focus businesses. We are all the other defocused businesses are already shut down. So there is no question of having any favorite children now and unfavorite children. All 5 are doing extremely well. Within that, of course, as far as book growth is concerned, on the lending side, we expect, as far as book growth is concerned, we expect rural and housing to be growing faster than wholesale over a medium to long term, and proportion of these 2 books to increase slowly and steadily over wholesale. Another interesting part is the growth in our non-funded business, and you will also see excellent growth in our mutual fund and wealth business as well as income. So once again, to reiterate, all the 5 focus businesses are going extremely well.
Okay, so that was the management of L&T Finance Holdings, sounding quite bullish as far as the outlook is concerned. But with that, we go back to Navneet, who has more F&O strategies for you guys.
I don't have any more strategies. Thanks for that, Yatin. But we'll wrap it up here on this edition of the F&O Show. Thanks very much for watching, and for more news and updates, stay tuned to BQ Live.